won't believe what's happening in the housing market right now. Mortgage rates have surged to a staggering 21-year high, reaching 7.09%. But why is this happening, and how is it going to affect you? Stick around, because we're about to dive deep into this financial phenomenon that's shaking the foundations of the American dream. So let's start with the basics. Just a year ago, mortgage rates were hovering around 5.13%. Fast forward to today, and we're looking at a rate of 7.09%. That's a significant jump, and it's making everyone from first-time homebuyers to seasoned real estate investors sit up and take notice. But here's the kicker. This isn't just some random fluctuation. There's a method to the madness, and it starts with the Federal Reserve. You see, the Fed has been on a mission to combat inflation, and one of their primary tools is interest rates. Since March 2022, they've raised interest rates a total of 11 times. Yes, you heard that right, 11 times. This has a ripple effect that reaches far and wide, affecting everything from the cost of your car loan to, you guessed it, mortgage rates. Now let's talk about you, the potential home buyer. Imagine you were eyeing a $400,000 house last year. With a 20% down payment, your monthly payment would have been around $1,716. Fast forward to today's rates, and that same house would cost you a monthly payment of $2,477. That's an extra $761 every month, just because you waited a year. And it's not just you. A recent survey revealed that 66% of people interested in buying a home are now waiting for rates to go down. But what about the sellers? You'd think they'd be eager to cash in on the rising home prices, right? Wrong. Sellers are also feeling the pinch. With fewer people able to afford homes, there's less incentive for sellers to put their properties on the market. In fact, about 80% of current mortgage holders are locked in with rates less than 4.25%. Why would they want to jump into a market with skyrocketing rates? The tension is palpable, and everyone's asking the same question. Is now the time to buy, or should we wait? But before we get to that, let's take a trip down memory lane. The last time mortgage rates were this high was in April 2002, when they hit 7.13%. A year later, they had dipped to 5.79%. So there's a precedent for rates coming down, but it's not a guarantee. You might be wondering if history will repeat itself. Will these sky-high rates eventually come back down? Well, experts are saying that we might see some downward pressure on rates throughout 2024. But don't get too excited. We're not going back to those record low rates overnight. The process is gradual, and patience is the name of the game. Now let's talk about the elephant in the room, the pandemic. Remember those days when mortgage rates were at historic lows, sometimes even dropping below 3%? Ah, good times. But those days are behind us, and the pandemic has left a lasting impact on the financial landscape. So if you're waiting for rates to plummet back to those levels, you might be in for a long wait. But here's where things get interesting. Some experts are predicting what's known as a soft landing for the U.S. economy. In simple terms, a soft landing is a state of low inflation that also avoids a recession. It's like the Goldilocks scenario for the economy, not too hot, not too cold, just right. So while we may not see mortgage rates plummet, we might avoid a more catastrophic economic downturn. So what does all of this mean for you? Whether you're a buyer or a seller, the current mortgage rate landscape is a complex puzzle. For buyers, it might mean adjusting your expectations and perhaps considering homes in a lower price range. For sellers, it might mean waiting for a more opportune time to list your property. And for those locked in at lower rates, the incentive to move or purchase a second home is limited because of the additional cost. In conclusion, the surge in mortgage rates to a 21-year high is more than just a headline. It's a financial event that has far-reaching implications for anyone looking to buy or sell a home. It's a wake-up call to be financially savvy, to understand the market, and most importantly, to make informed decisions. So, there you have it. The real meaning behind the surge in mortgage rates. It's a complex issue with multiple layers, but understanding it can make all the difference in your financial future. If you found this video insightful, don't forget to hit that like button, share it with your friends, and subscribe for more content. I'd love to hear your thoughts on this topic, so drop a comment below. Thanks for watching, and until next time, stay financially savvy.